Hi everyone, welcome back to Be Rich. I have Anand with me. It's a Sunday evening before you get back from your long weekend and get into the week. I thought we'll have a discussion like yesterday. Since all of you enjoyed the discussion yesterday, I thought I'd have him again and talk about something interesting, because a lot of us ponder and wonder if we should be considering certain stocks or not. We like to have them in our portfolio. We always look at them as thoroughbred horses running out there, and we wish we had them in our stable to enjoy these stocks. But unfortunately, because the markets are in exaggerated all-time highs, we have been avoiding them. Then we see this deep correction thanks to the Trump's tariffs, which has been a blessing in disguise for value investors like us. We have been itching to dive into this and swallow some of these things as stiffen than coffee, but Anand has been telling us not to. So I wanted to argue with him today, being Sunday evening. Why? What's the big deal? These are good companies. They seem to be of value now. This is one of the biggest corrections we have seen, where we dipped into the bear market in the US and we pulled back. And now this languishing pain of tariffs continuing with China, where now he's ratcheting it up thanks to them saying, Boeing, we will not deliver. He's saying, I'll take it to 200 plus. It's becoming nonsensical now, where these tariffs have no more meaning. I don't understand why we cannot look. It looks tasty.
Okay, I told you two things. I call these companies diamond needles. You call them as thoroughbred horses. I call them needles because needles can also prick your eye. And once you prick your eye with a diamond needle, you cannot get back your eye.
Yes.
So
once the diamond needle still pricks your eye.
Yeah. So at the end of the day, like Warren Buffett says, rule number 1 is don't lose capital. Rule number 2 is don't forget rule number 1. So value of a stock is derived from its earnings and earnings potential. Let's take two stocks, one Indian and one
American.
First, let's look at the Indian stock, Trent.
Fabulous company.
Yeah, it's a great company.
Yes.
But had you bought it last year, what would your position be?
It will be very painful.
It will be very painful.
Yes. Just put it mildly.
It will be a lot more painful. In one of these,
I will be finding it very uncomfortable to sit right now.
Yeah, in one of these recent days, it fell by 20%.
Yes, and I even came running to you and asked, Anand.
Yeah. So
you said no.
Yeah, it's still about 70 or 56 times earnings. At one time, it was nearly 100 times earnings or slightly more than that.
Yes.
Why I am trying to tell you is, no company can continue to keep growing at 100%. So suppose the company's profits grew at 50 times. Suppose you had 20 rupees stock today, right? And it is at 20 rupees is the EPS, and it is 2,000 rupees is the price of that stock into 100. So what is the justification? This has to be 200 rupees, 20 times earnings. The price has to remain at 2,000 and this has to be 200, right? The company's profit goes by 100%. 20 becomes 40, 40 becomes 80, 80 becomes 160.
Yes.
160 becomes 320. It takes 4 years.
Yes.
Right? No way. You have a company, unless it's very small, which is Trent is not, cannot grow 4 times in 4 years. It cannot.
Unless it is some miracle of God happens.
So when the profit starts to come down, profit goes. Normally, even if it grows at 20%, 20 is 22, 22 is 25, 25 is 27 and a half, 27 and a half is 30 or 31.
Okay.
So what will happen is 2000 will correct, not the EPS. The value is determined by the EPS finally. So all it took is some news to say Zudio will not be able to sell at the same pace it was selling.
Because thanks to Reliance and Shein partnership.
So at the end of the day, it won't matter. Because Reliance cannot sell to...
Yeah, that partnership also now China said no.
And I am saying Reliance cannot be a consumer company.
No, it's not.
Reliance is a B2B company.
Yeah, they're struggling with this consumer business.
Yes, their valuation of their retail has dropped by 50%.
Yes.
But market needed an excuse to correct. Even in this Campa business, which everybody is celebrating, Reliance is selling because he is giving at half price.
True.
If Reliance comes to normal price,
he's selling at almost at cost.
He is selling below cost. So distribution, everything is below cost.
Yes, because he wants to capture some market share.
After that, you increase prices, Coke will come back. Right? So it is very clear that these disruptions will not affect trend. But still, a company cannot have statistical valuations. It will correct.
Okay.
So you don't own. Like a Titan, when nobody wanted to buy it at 2 rupees, they thought Tanishq is no business.
Yes. They thought it's done and dusted.
Done and dusted in 25 years back. Today, the same company is at 80 times earnings, 90 times earnings. It will correct. It will correct. It cannot be growing at the same pace. But then they will assign reason, saying that Birlas will capture this.
They'll give some cockle yes, I understand.
But Birlas cannot capture this.
Agree.
Because Birla's retail business is doing very badly.
Agree.
Like his AB fashion business is making losses. So he is not going to start a jewelry business to give competition to this guy. There is already unorganized retail, which is supposedly putting pressure on Titan.
But that's not the logic we use when we invest.
Wait, Tanishq. But in paint, there is no competition. So, and they are sharing the same distribution through paint is a commodity. Right? Paint is not a brand. Tanishq has become a brand. But when Tanishq corrects, they will say extended competition from Birla, who has started a jewelry brand.
Yeah, but Birla hurt Asian Paints. You saw what Asian Paints has happened.
Because it's a monopoly.
Yeah, so this Tanishq is also they can do.
Tanishq is not a monopoly. There are several listed jewelry companies which we own. Tangamail, Kalyan, we own 2, but there are many more.
Yeah, we bought them. We're not suggesting you look at them. Okay, we're just saying Anand happened to buy them at the right time.
Yeah. So what I'm trying to tell you is, you need to have a DNA of B2C. Asian Paints is not B2C. Asian Paints is B2B. The painter decides what paint to buy.
Correct.
And their sales cannot go up exponentially. And this is not like Amazon, where the entire world is their market. In Amazon, the entire world is their market.
Correct.
So they can grow big speed.
Correct.
But most of Amazon sales came from cloud sales. So this is not going to be that. It's a brick and mortar retail with a presence in the internet. So there is no reason for you to give it such high valuations.
But I have a question.
Then if you buy it at high valuations, and then whatever happened to Trent will happen to you. And it will hurt very badly. And it can spend years, like what happened in Tata Steel. You can buy for 1,000 rupees and spend 15 years for it to come back to its normal price.
True. But in these kind of turbulent markets when we do not know anything, as a new investor, buying a brand like this, we feel safe. Because Tata as it is considered safe. And whatever it is corrected, something, even if it's corrected 20%, it's still a diamond needle. It's still a correction sizable enough for, we feel, new investors. We feel, what do you say to that?
There are 2 ways to lose money. You buy a lousy company like Jenson, you are going to lose money anyway.
Correct.
Right? If you buy a good company at an overvalued price, you will still lose money because you will not get any capital return and you can lose 50% of its value. Trent can be still a great company and trade at 50% of peak value for many years.
Correct. But if you take companies like Nvidia and Trent, where we have so many people around the world chasing these companies, the chances of it coming to any value where we can enter, it looks very remote.
See, boss, investing is like a flowing river. Does not mean that you have to hit every ball. That's what, using a baseball analogy, Buffett explains. You have to wait for your perfect pitch. You can let go of how many hours you want. Same way, like in cricket in India, you can keep playing forever till you get the perfect full toss and hit it out of the ground. You are not constrained that you have to hit a 6 within so many overs.
Correct.
So, okay, so be it. Trent is not in your portfolio. You missed it, you missed that bus, you missed that full toss.
The same problem is what we feel with Nvidia, because no one never thought Nvidia will become what it is, AI what it is. But now looking at where AI is going, the earnings, at least, okay, Trent, I agree, brick mortar, everything what you said is true. But in terms of Nvidia, AI is the future.
Yeah, but Nvidia, no, what is the problem? There are 2 problems in Nvidia.
What is the problem?
DeepSeek has shown that you don't need the latest chips.
True.
Now there are other Chinese and some Indian American model which says with ordinary CPUs itself you can deliver ChatGPT level performance. So this powerful chip pricing power that Nvidia had, it may not have it anymore. So that is one thing. And that's why Nvidia got hammered first when DeepSeek came. Now the next big problem is if you want to sell in America or you want to be an American company, you cannot sell to China. No chips. So that's already $6 billion worth of sales minimum rolled out. China is going to be for a long time the largest market.
Yes.
And if you cannot sell to the largest market, then what are we talking about? Valuations. America and Europe is a dead market. America cannot grow so fast. So a major chunk of Nvidia's business is gone. And already what is now it's emerging, Nvidia was selling to companies where it had a stake. And to keep the price of its chips high.
Yeah, there is news about that. Yeah.
So already they were doing some juicing of profits. So there's no way you don't need Nvidia to deliver ChatGPT. B, you cannot sell to China. A combination of both bad news. And the guy who bought Nvidia at the peak is going to nowhere near that peak again in his lifetime.
Then what do you do even with companies like Apple? Because even Apple doesn't have access to Chinese market now. And China was one of their largest markets, contributing to a lot of their sales. And now with this current scenario, even someone like Apple, so then do we abandon companies like Apple?
You don't buy Apple directly, no? You buy it through Berkshire Hathaway.
Okay.
You own Berkshire Hathaway, you own a sizable portion of Apple.
So one of the best strategies would be is, you're saying is, like, take exposure in where you would like by mitigating the risk by being part of someone else's
because
holding.
Buffett is running an insurance behemoth. And he also happens to own
Apple. It's still very confusing times, Anand. Considering all this.
No. You get to own Apple.
Yes.
Apple comes cheap, you buy cheap directly. Till it comes cheaply, I've been owning Apple because I own Berkshire. So there's nothing wrong with that strategy.
But what do we do as investors when we have so much of change happening? One, the tariff change. One is macroeconomic change. The other is this whole AI thing. We do not really know where AI is going.
What is my circle of competence? My circle of competence is to buy a 10 rupees stock for 5 rupees. There is plenty available in the Indian market and there's plenty available in the American market where a 10 rupees stock is available for 6 rupees, 7 rupees, 5 rupees. Go ahead and buy it. Don't buy a 10 rupees stock for 40 rupees, worth 40 rupees. What is worth 10, you pay 7, 8, you'll make some money. You buy 5, you buy it for 5, you'll make a lot of money. But a 10 rupees stock you buy for 40 rupees. Sooner or later it will come near to 10. So it won't go. The chances of it coming to 20 is greater than it going to 80.
True.
So what is your circle of competence?
Okay.
My circle of competence is never to buy something I don't understand. Always buy something I understand. And below the price I calculate.
Okay. There you guys go. What Anand has said, some food for thought is given you on this Sunday. Keep in mind as we get into next week. Stay within your circle of competence. Don't go venturing out in deep waters, get yourself in trouble, because we do not know what is lurking in these deep waters in the current environment we are in. So don't get carried away with flashy headlines. Don't get pulled into drama. Stay in what you know. And if you find value in what you know, keep investing in Tiffin Coffee range as always. Thanks for watching the video today. We wish you a wonderful evening and hope you have a productive week ahead. See you again soon. Bye.
Bye.